Goodwill is created when a company buys another for more than its tangible assets are worth. It can either become a hidden gem, adding value, or a ticking time bomb, eating into earnings. Intangible assets are recorded at either their cost value or market value, whichever is lower. When their market value drops below cost, an impairment is recorded, signaling management's recognition of a loss in value. While these impairments don't involve any cash outflow, they reduce the value of assets on the balance sheet and lower earnings, which can lead to a drop in the company's share price. For VF Corporation, this raises an exciting question. Could this open up opportunities for smart investors to gain an edge over others? Let's dig into the numbers from 2014 to 2023 and see what story they tell. In 2014, VF Corporation recorded a significant $396.4 million impairment expense for goodwill and intangible assets due to their annual testing. This non-cash charge directly impacted earnings, reducing EPS by 70 cents from $2.71 in 2013 to $2.38 in 2014. This decline reflected challenges in maintaining the value of acquired assets despite improved operating performance. The resulting earnings drop may have influenced investor sentiment, potentially applying downward pressure on the stock price. For savvy investors, this situation could present a unique opportunity to assess whether the market reaction aligns with the company's long-term fundamentals. In 2015, VF Corporation recorded a $143.6 million impairment expense for goodwill and intangible assets. This resulted in a 23-cent per share non-cash impairment charge during the fourth quarter, part of VF's annual impairment testing of intangible assets. Despite this impairment charge, VF's earnings per share increased by 20%, rising from $2.38 in 2014 to $2.85 in 2015. In 2016, VF Corporation recorded an impairment expense of $79.6 million for goodwill and intangible assets. This led to a 33-cent per share impact, contributing to a 9% decline in earnings per share from $3.04 in 2015 to $2.78 in 2016, adjusted for discontinued operations. In 2017, VF Corporation recorded a $104.7 million goodwill impairment for the Nautica brand and included in earnings from discontinued operations for the year. In the fiscal year ended March 2019, VF Corporation did not report any impairment of goodwill or intangible assets, marking a year free from such charges. In the fiscal year ended March 2020, VF Corporation reported a goodwill impairment of $323.2 million. This impairment had a significant impact, reducing earnings per share by 81 cents. As a result, EPS decreased by 28%, falling from $2.17 in 2019 to $1.57 in 2020. In fiscal 2021, VF Corporation recorded a non-cash impairment charge of $20.4 million related to the write-off of certain trademark and customer relationship balances. In the fiscal year ended March 2022, VF Corporation did not record any impairment charges, marking another year free from such expenses. In the fiscal year ended March 2023, VF Corporation recorded a significant goodwill and intangible asset impairment charge of $735 million related to the Supreme Reporting Unit. This charge reduced earnings per share by $1.72, contributing to a dramatic decrease in EPS from $3.10 in 2022 to just 31 cents in 2023. In the fiscal year ended March 2024, VF Corporation recorded goodwill impairment charges totaling $507.6 million. These charges were related to the Timberland, Dickies, and Icebreaker reporting units, highlighting continued challenges in maintaining the value of acquired assets. Over the analyzed period, VF Corporation recorded significant non-cash impairment charges for goodwill and intangible assets, totaling billions of dollars. These charges directly reduced earnings per share in multiple years, with particularly steep impacts in 2014, 2020, 2023, and 2024. While these impairments do not involve cash outflows, they highlight challenges in sustaining asset values, significantly affecting reported profitability and potentially influencing investor sentiment. At the same time, they reflect VF's responsible and transparent management practices in recognizing and reporting changes in asset values promptly. Next, we'll analyze VF's interest expenses, a key number that reveals a lot about its ability to grow your wealth. Don't miss it. Subscribe now and stay tuned.